Good day and welcome to the SNN Network Summer Virtual Event. Our next presenting company is Delta 9 Cannabis. It is now my pleasure to turn the floor over to John Arbuthnot, CEO and founder of Delta 9 Cannabis. Sir, the floor is yours.
Thank you and good morning everyone. Welcome to the SNN Virtual Conference. My name is John Arbuthnot and I'm the CEO and co-founder of Delta 9 Cannabis Inc. Today I'm going to lead you through our company's history and key points of differentiation, our most recent financial and operating results for the year end last year and for our Q2 2021, and chat a little bit about why we feel now is an attractive time to become a shareholder in Delta 9. Just going to flip over here to the legal disclaimer before we begin. I do want to remind everyone that today's presentation may contain forward-looking statements that reflect the company's current views with respect to future events. Any such statements are subject to risks and uncertainties which could cause results to differ materially from those projected in the forward-looking statements. For more information regarding risks and forward-looking statements, please refer to our company public filings which are available on SEDAR and our company website. And with that said, let's begin. So Delta 9 is one of Canada's oldest cannabis companies with over 7 years operating experience. Founded in 2012, Delta 9 became the fourth licensed producer of medical cannabis in Canada in late 2013 under the Health Canada MMPR program. Now the early years of the company were modest as a small privately held licensed producer. 2017 became the real growth year for the company. We raised approximately $10 million throughout the year and listed our shares publicly on the Toronto Venture Exchange in November 2017. Since that time, we've raised a little over $85 million through a mix of debt and equity to fund the expansion of our various businesses. We're now one of the few vertically integrated and diversified cannabis companies in the country, licensed by Health Canada for cultivation, processing, extraction, and wholesale distribution across 6 provincial markets. We're a licensed retailer. We currently operate 12 cannabis retail stores with plans to open up to an additional 8 stores over the next 6 or so months. And we operate a business-to-business segment where we sell our proprietary cultivation platform to other licensed and pre-licensed operators. We provide consulting and licensing services, and we sell cannabis genetics. The company currently employs about 375 across our businesses across Canada. And our shares now trade on the main board Toronto Stock Exchange under the symbol DN and on the OTCQX market under the symbol DLTNF. Now on the cultivation side of our business, what really makes us different is how we grow. As opposed to the big open warehouse and greenhouses used by many of our competitors, our proprietary cultivation methodology is based around a modular, scalable, and stackable production unit which we call the grow pod. We believe that grow pods provide numerous benefits versus traditional open warehouse or greenhouse cannabis production, but most namely, it gives us a very high level of control over the growing environment. It allows us to dial in those factors that most directly contribute to product quality, temperature, humidity, light intensity, parts per million CO2 saturation, all of those components dialed in very precisely within these areas, leading to a higher quality output product. It also allows us to customize the growing environment for each genetic strain of cannabis that we produce. This maximizes, again, quality and yield across those varying varieties. The grow pods are relatively inexpensive from a CapEx perspective, obviously translating to higher return on invested capital. The modular format minimizes the risk of contamination or cross-contamination, and conversely, the modular format minimizes the risk of materially significant crop loss within our facilities. As we've scaled our operations over 2019 and 2020, we now have 297 of these grow pods under license by Health Canada within our state-of-the-art cultivation and processing facilities. Now, beyond the operational benefits, there's a strong economic case for the pods. As I mentioned, Delta 9 manufactures these grow pods in-house, and we employ a team of trades to install the units within our facility. We've historically expanded our operations for under $100 per square foot. This relatively low CapEx per foot translates into a higher return on invested capital as these grow pod areas are operationalized. The company's production operations provide the company with relatively cheap input costs such as electricity and labor, As we've scaled the number of grow pods in production over the last few years, we've also invested heavily in automation of key processes within our facility. These automated processes have streamlined our labor requirements, translating into significant improvements in production costs per gram. Over the year, production costs have trended downwards, over the last 18 months, from close to $1 per gram to just 65 cents per gram in Q2 2021. This puts us in an industry-leading category in terms of production efficiencies. Now, from a scale perspective, the company currently has, as I mentioned, 297 grow pods, currently licensed by Health Canada as a part of our Phase 1 and Phase 2 facilities, representing approximately 95,000 square feet of flower and canopy under production. Our current cultivation capacity is approximately 8,325 kilos per year of high-quality dried cannabis material, or about $20 to $25 million worth of dried cannabis in today's wholesale market. Our site in Winnipeg is comprised of 137,000 square feet of industrial space and 47 acres of industrial land, giving us ample space to continue to expand our operations as needed into the future. Now, we're continuing to work to expand our Health Canada license perimeter to include additional buildings on our site, which will bring our total license square footage to approximately 135,000 square feet. The company is investing in a number of research and development and trial projects in our existing space, which should increase our overall production capacity measurably and increase production efficiencies while maximizing the utilization of our existing assets. Over the long term, we plan to continue to bring on additional supply capacity as the legal Canadian cannabis market continues to expand. But due to the overall weakness in the Canadian cannabis wholesale market pricing, we have suspended our aggressive capital expansion plans for our Delta 9 facilities until there is greater certainty in the overall market. Now, in terms of the company's product offering, our company vision is to create quality Delta 9 branded consumer packaged products and offer them at competitive prices, driving a strong value proposition for our end customers. Delta 9 currently offers approximately 20 different SKUs of dried flower, making up the majority of our overall product offering. The balance of our product offering is comprised of blended cannabis products, 4 different SKUs of cannabis pre-rolls, ingestible cannabis oils, powdered cannabis kief, cannabis oil vaporizers, and we have several SKUs of 2.0 or cannabis derivative products currently in development. Now, there's been significant excitement in the Canadian cannabis space over the rollout of these 2.0 and derivative products. However, dried flower continues to demand over 60% market share by category in the Canadian marketplace, with much of the consumer demand in the high-potency segment. In our cannabis flower portfolio, Delta 9 has a large number of high-potency and high-quality varieties. We have been pivoting our production towards high-potency as much of the consumer demand, again, is toward high-THC products. At the beginning of 2020, our average THC potency in a batch was about 15 to 16%. We've now successfully increased that to 19 to 20% on average, and continuing that pivot towards the highest potency cannabis products. With relatively low production costs and improved price stability in the Canadian cannabis wholesale market in 2021, we believe that we're well positioned to provide a well-rounded dried flower portfolio across our provincial markets in Canada. Now, cannabis pre-rolls became an increasingly important category in 2019 and 2020 as consumers moved to small packaging sizes and sought convenience in a pre-rolled setting. This has become increasingly important through 2021 as consumers have moved towards cannabis pre-rolls in smaller and smaller sizes as they are no longer sharing cannabis products through COVID-19. Delta 9 has launched 4 cannabis pre-roll products through 2019 and 2020. We have sold well in excess of 1 million cannabis pre-rolls over the last few years. We are investing in further automation of our pre-rolls manufacturing in 2021, which will increase our capacity to produce and distribute pre-rolled products across all of our provincial markets. Now, Delta 9 was licensed by Health Canada in 2019 to sell cannabis oils, extracts, and derivative products. It is our belief that these products will become an increasingly important component of the medical and recreational use cannabis markets into the future. In our wholesale business, Delta 9 currently sells branded cannabis oils, cannabis kief, pressed hash, and cannabis vape cartridges in various markets across Canada. Our goal for this year is to continue to improve our 2.0 cannabis product line by developing and launching additional cannabis concentrates, refining and improving our existing line of cannabis vapes and oils, and launching cannabis gummies late into the year. The company continues to actively monitor consumer trends through our retail store chain and will invest in additional 2.0 product categories as the segment expands in 2021 and beyond. From a distribution standpoint, we are currently licensed for distribution in Manitoba, Saskatchewan, Alberta, British Columbia, Ontario, and Newfoundland and Labrador, giving us reach from coast to coast here in Canada to upwards of 25 million potential Canadian consumers. As the company increases its production capacity, we plan to add additional distribution markets incrementally through supply listings or formal supply agreements within those markets. Now, on vertical integration in cannabis retail, Delta 9 opened its first Delta 9 cannabis store on Legalization Day in Canada on October 17, 2018, to lineups around the block. Since that time, our retail store chain has grown to one of the largest in the country in terms of revenue per store and revenue per square foot. We now operate 12 Delta 9 branded bricks and mortar cannabis retail stores spread across the Manitoba, Saskatchewan, and Alberta markets. We believe there's a number of benefits to pursuing this vertical integration strategy into retail. This gives us direct control over the push of our products from a distribution standpoint through to the end consumer. In a very limited marketing and advertising environment, we are very restricted here in Canada on how we can market and advertise cannabis products. This gives us the ability to direct-to-consumer brand our products and push those marketing initiatives directly to, again, those end consumers. Obviously, this allows us to capture additional revenues and gross margins from retail cannabis sales, very important in an overly saturated market environment. This gives us direct feedback from consumers regarding our products, regarding other product trends, marketing strategies, etc., as we get to see exactly what is being successful in the cannabis market from ourselves and competitors. And it gives us live product and sales analytics, which help us improve our overall business offerings. Our retail strategy is simple. We partner with the industry's leading product manufacturers. We position to be competitive on pricing, beating not only our competitors' prices, but the black market as well. We employ knowledgeable and friendly customer service staff. We craft inviting, well-designed, and well-lit stores in convenient, high-traffic shopping locations, and we are well-positioned to win this war on cannabis retail. Over the past 12 months, we've made significant progress in expanding our retail store footprint. We started 2020 with only 4 operating stores. We closed out the year with 9 operating stores. We now have 12 operating stores spread across our provincial markets. We plan to have up to 20 operating stores by the end of this calendar year. The strategy to expand will be driven by a mix of organic store build-outs and mergers and acquisitions of existing store chains with existing customer bases, revenue, and EBITDA profiles. We feel that this approach will allow for not only the lower-cost organic store builds, but also accretive acquisitions as we build our growth strategy. The success we've seen with this vertical integration model has been instrumental in driving sales of Delta 9 products direct to Canadian consumers and will play a large role in the company's business model moving forward. In our B2B segment, the company derives a portion of our overall revenue from sales of cannabis genetics, sales of grow pods, sales of cultivation and processing equipment, and from licensing and consulting activities provided to other licensed and pre-licensed cannabis companies. We do believe that these opportunities provide us with a number of benefits, including a complementary business vertical, which produces diversified and high-margin revenue streams. It's a third-party validation of the company's proprietary grow pod platform. It creates valuable partnerships with other licensed cannabis companies, and provides the opportunity for international expansion through non-cannabis and the more picks and shovels revenue streams. Now, we believe our B2B vertical provides investors with that unique exposure to the more infrastructure side of the industry. This also represents a unique opportunity for Delta 9, given sales of equipment and our grow pods are not prohibited in the United States. As a TSX issuer, Delta 9 is prohibited from cannabis-touching activities in the United States in advance of federal legalization, but we can sell equipment and we can sell grow pods. Delta 9 began our expansion into the U.S. market through our B2B segment in 2020, successfully building out facilities in Maine and Michigan. We are seeing market momentum in markets now in the United States like Illinois, like Montana, as well as in other mature markets like Colorado and California, where products are legal for either recreational, medical purposes, or both. We will continue to expand this segment into the United States in advance of federal legalization south of the border. Now, turning to the company's most recent financials, you'll see that the company has demonstrated over the past 12 months, over the year 2020, that our focus on operational and financial results has begun to pay off. The company's produced significant revenue growth in each year since listing our shares publicly. Revenues have grown from less than $1 million in 2017 to $7.6 million in 2018 to over $32 million in 2019. And the company recently released our 2020 financial results showing revenues of $52 million, an increase of 64% from $32 million the year prior. Since the company listed its shares publicly in 2017, we've successfully grown revenues by over 5,400%, making us one of Canada's fastest growing companies by revenue over that period. From a revenue segmentation standpoint, in 2020, Delta 9 reported retail revenues of $32.2 million. That was up 109% year over year. Wholesale revenues were $11.8 million, up 24% year over year. And B2B revenues were $8.6 million, up 38% year over year. On a quarter-over-quarter basis, we provide key performance indicators that provide investors with an indication that our company is moving in the right direction. The company's increased production output over the last year from about 1.2 million grams in Q1 2020 to 2.2 million grams in our most recent Q1 and Q2 2021 periods. As the company scaled output capacity over this period, we've seen direct production costs per gram decrease from 98 cents per gram to just 65 cents in Q2 this year. Grams released and grams sold have also increased exponentially, and we will continue to see relative stability in our wholesale pricing in the $3 to $3.50 range. In retail, same-store sales improved significantly over 2020 as we've seen grams sold and the number of retail transactions increase quarter over quarter. Average cart sizes have generally increased to the $45 to $50 level as we begin to hone our strategy in retail to maximize value for our customers and our suppliers and secure our position as a leading Canadian retailer. Gross profit for the full year last year was $17.8 million. That was up 105% year over year. And most notably, Delta 9 in 2020 produced our first full year of positive adjusted EBITDA of $3.8 million, up from an EBITDA loss of $3.4 million the year prior. The company also produced positive cash flows from operations of $1.5 million in 2020, making Delta 9 one of the few Canadian cannabis companies which has produced positive EBITDA and operating cash flows. In Q4 2020 alone, the company recorded record revenues of $14.2 million and positive EBITDA of $1.9 million. Now, turning over the page to 2021, the company's continued to see upward momentum. Earlier this week, we reported our Q2 2021 financials, and we produced again record revenue results. This showed $16.75 million in top-line revenue. That was up from $13.2 million in Q1 this year. From a segmentation standpoint, retail sales reached $10 million for the quarter, up from $9.3 million in Q1. Cannabis wholesale revenues reached a record $5.6 million, up from $4.3 million in the first quarter this year. And B2B revenues reached $1.8 million, up from just $180,000 in Q1 this year, demonstrating that Delta 9's diversified revenue growth strategy has been effective in producing top-line growth. Adjusted EBITDA was $1.2 million for the quarter, the company's 7th consecutive quarter of positive adjusted EBITDA. On the balance sheet, management has ensured the company has maintained a strong working capital position, ending Q2 this year with over $5.5 million in cash and over $20 million in working capital. The company is currently well capitalized to continue to execute on its expansion plans and can act opportunistically where assets become available, which can expedite expansion, provide strategic value, and improve the financial and operating performance of the company. Now, turning to the cap table, you'll see that Delta 9 has a fairly tight capital structure with approximately 102 million shares currently outstanding. At today's market price, this gives us a market capitalization of approximately 42 million. We would suggest that on a pound-for-pound basis, there is no company in the Canadian cannabis industry with more revenue and EBITDA relative to our current market capitalization than Delta 9. This creates a significant opportunity for investors seeking value in the cannabis space. So why invest with Delta 9? We have a track record for success. Delta 9 is focused on execution on its diversified growth strategy and has produced significant revenue growth across our businesses in the wake of legalization. We have investment from management. Delta 9's management is highly invested in the company, representing approximately 36% ownership of the common shares of the company. Diversification. Our diversified revenue approach mitigates risk in an uncertain market environment. A path to profitability. Investors are increasingly seeking cannabis investments which have achieved profitability. The company, as we noted, produced over $3.8 million in adjusted EBITDA in 2020 and has demonstrated that its business model can be profitable and produce positive cash flows. We have an attractive entry point valuation. Delta 9 trades at a significant relative discount for our financial and operating results versus our peer competitors, and presents an attractive opportunity for investors looking for a cannabis company with a track record for financial and operating performance. We have a proven business model with the opportunity for international expansion. Delta 9's business model can be quickly adapted to operate in jurisdictions around the world as they reform and implement new legislation and regulation of medical and recreational use cannabis. We anticipate that the market in Canada alone will continue to expand at significant compounded annual growth rates in the coming years, and with several international market opportunities beginning to emerge. I want to thank everyone for taking the time to hear our presentation today. As always, management's focus will continue to be on execution on our business plan with an eye on creating long-term shareholder value. And with that, I will just remind everyone that there is an opportunity for Q&A here today. If you want to plug any questions you may have into the chat box, we'll just give a few moments for questions to come in here, and we will get on to a few moments of Q&A with the time that we have left. So first questions rolling in now, thoughts around U.S. legalization. So good question. Obviously have seen kind of a wave of excitement in the wake of the fall election last year around the potential for U.S. federal legalization. We do see this as a matter of, of when, not if. I think it was perhaps unrealistic to think that within the first 6 months of the new administration and the composition of the Senate and the House that we were going to see a U.S. legalization bill pass. That being said, there have been several put forward in the United States. I think we're seeing increasing momentum, not only seeing states, numerous dozens of states legalize for medical and recreational purposes, but we are seeing momentum at the federal level as well toward potential legalization and regulation of cannabis. I think what we really look to highlight for investors here on the U.S. opportunity is, again, Delta 9 has some near-term exposure through our GrowPod and B2B segment. We obviously have the ability to capitalize on access to capital from U.S. investors, to access U.S. capital markets over the near term. Long term, that vertically integrated business model, which has been very successful for us in Canada, very similar to the operations and business model of the largest U.S. MSOs. I think it stands to reason that we can take the Delta 9 business model into the United States and see success on that business. Next question, looking at the competitive landscape, who's a larger player that you aspire to be? I don't know that we aspire to be necessarily. Our largest competitors, obviously, Canopy Growth, Sundial Growers, Tilray, Hexo. Would note many of these companies are actually partners of the company through our retail segment. We have brand partnerships with the largest companies in the Canadian cannabis space and do millions of dollars of business with them. every year. We do see ourselves as very different. As a relatively smaller company, we have had that laser focus on operating efficiencies, on profitability, on making that transition to positive EBITDA. I think there's a real opportunity for Delta 9 to continue to expand, continue to demonstrate there's a sustainable and profitable business model, continue to push on this vertically integrated strategy. We see other companies like Sundial Growers, their recent acquisition of Inner Spirit Holdings, as their pivot towards that vertical integration strategy. So I think that's probably speaks to one of our larger competitors acknowledging that a vertically integrated business model may be key in terms of their continuing expansion in the cannabis space. Investor sentiment in the cannabis space, is there going to be another run-up similar to early 2021? Good question. Again, this was in the wake of the most recent U.S. election results, where we saw a run-up in cannabis equity and share prices early in 2021. Obviously, you've seen several times over the last few years, kind of the momentum trading come into the cannabis space. I think we continue to be bullish over the long run on the market opportunity for cannabis, both in Canada, in the U.S., and globally. I think investors who are really looking at this as that generational opportunity, as not only, again, Canada, the U.S., but international markets, begin to reform their cannabis laws to more, reflect those that Canada has taken on, presents a huge opportunity for companies like Delta 9 that have been participating early on a first mover advantage basis in the cannabis space. So, I think investors that are looking long at the industry, that are looking to find companies that are creating market share, that are creating, positively received consumer products, distribution, all of those are opportunities for investors to see future returns from our perspective. Question here on the company's stock ticker. So we do trade under the symbol DN on the Toronto Stock Exchange. We also trade under the symbol DLTNF on the OTCQX market. For investors who are looking for more information on the company, investor relations materials, etc., you can check out our consumer-focused website at delta9.ca. You can also check out our investor-focused website at invest.delta9.ca, or go to delta9.ca and click the investor tab at the top corner. We do have all of our investor materials, investor decks, fact sheets, as well as all of the company's financial results and management discussion analysis documents posted on the website. So great source of information for investors who are looking for the most up-to-date on the company. And we'll just give investors another few moments to chime in here with any questions. I think we've got about 2 minutes remaining. And with there being no further questions, I will turn things back over to the operator. Thank you, everyone, again, for taking the time to join us today.
Ladies and gentlemen, that does conclude the Delta 9 Cannabis presentation. Thank you for joining us.